Good morning, folks. Welcome to another beautiful day. We're going to get started in about 30 seconds. Yes, for those of you in the back, there's still a lot of room up front. And grab your cup of joe or tea or whatever else you're drinking and settle in because we'll be getting started in a moment. Good morning, folks. Another beautiful day, June 4th, 2020. Sun is shining. Weather is nice. You need to go out and take a walk or do something fun. Don't stay in all day long, but glad you're here to listen and watch our webinar, Preparing for COVID-19 Recovery, Loan Options, and Forgiveness Strategies. Yes, we are continuing with this program with updates every week. And yes, there are things that are coming out. Thank God. Okay, here's our slide that basically tells you that this webinar presentation is for general guidance only, which means it doesn't constitute the provision of legal, tax, accounting, investment, advice, or professional consulting of any kind. And yet we are presenting things that are important for you to hear. So we're telling you before you make a decision or you take any action, you should consult a professional advisor. Hopefully it's one of us, if not, whoever it may be, to move forward with your decisions. Okay, something new, CPE. That's continuing professional education. For those of you who are CPAs, we are offering something new to the vast group of you out there. If you want CPE, there's a few things you need to know. First, you need to stay for the duration of this webinar. And yes, we do keep track of who leaves early. Second, there is going to be 4 polling questions. We don't really care how you answer the question. Just the fact that you do means that you actually are there. You have to answer 75% of those questions, which means 3 out of 4. So if one slips by you, okay. And third, in the handouts is a participation sheet, an evaluation sheet that you need to complete and send to the email address that is attached to it. And once you do that, in a few days, we will give you your CPE certificate. By the way, when you're doing your polling question, if for whatever reason you push that button and it doesn't go through, hit escape and try again. It should work. So that's the good news about CPE considerations. And guess what? We have our very first polling question. So here it goes, folks. The polling question asks, which of our 3 panelists, which would be Todd, Josh, or Steven, is such a big fan of WrestleMania that he purchased his own championship belt? Was it Todd, Josh, Steven, or all of the above, which means we all have our own individual championship belts? Go forth and click one of those items, and we'll give you 30 seconds to answer. Okay, the voting is going through. We're up to about 1/3 of the people actually voting. Doing a good job in voting, folks. Going to keep the poll open for a few more seconds. Okay, so let's see the results. Well, it looks clearly that Josh has 54% of the votes, and myself and Steve have 16%, and all the above 14%. All right, so let's go to the next slide. All right, now you can see this is our task force. Clearly, myself, Josh, and Steve. Josh has over his shoulder the championship belt. So if you guessed, Josh, you were correct. I don't know why I'm reading the book upside down. And Steve is very, very proud that this was his very first turkey for Thanksgiving, but he promises he's going to cook for us in all the subsequent Thanksgivings that will come in the future. Our agenda today. Our introduction, we have some updates, PPP loan forgiveness documentation, and an open discussion. So with that, I'm turning this over to Steve. Steve, will you take us through some really important updates about the PPP program and everything else PPP in the world?
Yes. Thank you, Todd, and good morning, everybody. Hope everyone is doing well and staying safe. Going to go through some updates, and this is very timely in that just last night we saw the Senate pass the Paycheck Protection Program Flexibility Act of 2020, something that the prior week was passed by the House. And while we anticipate presidential signature any day now, this is a very important area for borrowers in that it increases some borrower options here. So while the bill is not law as of yet, we do anticipate that shortly, so we'll go over some of the highlights. The loan term is extended from 2 to 5 years. The interest rate will remain at 1%, but this gives borrowers an opportunity to repay the loan over a longer period of time. And note that the act actually says that's a minimum of 5 years, so there could be an opportunity to even extend that further. The overall program is extended from June 30th to the end of this year, so there's more opportunity there, but there is something in the law that is saying that borrowers must apply by June 30th. So if you haven't applied yet, there's still an opportunity to apply, although we believe that that opportunity will end as of June 30th. So get your applications in. There's still money available. Our understanding is that there's still $130 billion left inside the program, so there's an opportunity there. Something very important here in that they extended the 8-week covered period, and this is important for borrowers who were butting up against the end of their 8-week period, in that now it's extended to the earlier of 24 weeks or the end of this year as well. So basically going to be given an opportunity to spend those funds and be forgiveness eligible till the end of December. So that's a welcome change, although borrowers do have the opportunity to stick with the 8-week period. The 75-25% split between payroll costs and non-payroll costs has been changed to 60%, 40%, although it is a cliff now, in that if you don't spend at least 60%, you will be, none of your spending will be forgiveness eligible. That's how the bill's written now. We'll continue to monitor that, but that's something that needs to be considered as well, although we hope the extension to 24 weeks gives out borrowers an opportunity to spend at least 60% of that on payroll. There is a removal of the restriction on the deferral of employer-side Social Security taxes. Currently, the CARES Act allows you to defer the employer-side payroll taxes until such time as you're given a decision on forgiveness. This new act now removes that interplay, so you'll be able to defer payroll taxes. The current law basically says you have a 6-month period to defer your loan payments. Now you're entitled to defer the loans until the forgiveness is remitted to the lender. So that removes any crossover where you hadn't received forgiveness, but your six-month period ended. So it again allows for some more borrower flexibility in case of borrowers that haven't received a decision on forgiveness. This is something that's also going to be a borrower favorable item, in that the rehire exceptions for FTE reductions, essentially the negative implications are loosened, in that if you make a good faith effort to rehire personnel employed as of February 15th, but are unable to do so because they're not qualified people, or that unfilled position is still available as of December 31st, that those negative implications are going to be gone. But here's something that's really borrower friendly, in that if you're unable to return to pre-February 15th activity due to a governmentally established requirements, implemented between March 31st and March 1st and December 31st, due to the standards here you see below, your forgiveness isn't going to be negatively impacted as well, meaning you're not going to lose the ability to get forgiveness because you weren't able to return to pre-February 15th standards. So that's something that's favorable in situations where there may be a reduction in headcount. But as we say here below, document. It's going to be the borrower's requirement to document all this and have it in writing. So it's something you're going to want to definitely focus on if this does indeed impact your situation. And lastly, you're basically going to have 10 months from the close of the covered period to begin or to apply for the loan or face repayment obligations, which is the principal, the interest, and the lender fees. So something to keep in mind there as well. As we said, this is not law yet, but we do anticipate it shortly. As become law, you can expect some future guidance from us, but we also do expect future guidance about the program in general, be it from the SBA or the other governmental authorities. So keep that in mind as well. And lastly, we wanted to touch upon the Main Street program. This is available to borrowers who, even if you did receive PPP funding, this program, it's separate from the SBA, administered by the Federal Reserve. We've been through this before in terms of the 3 new facilities. It is a traditional loan program, with minimum and maximum loan amounts. But the point being here is that the launch date is expected shortly. It says here early June. It is early June now. So we are looking to see that this program will be administered and released as well. And hopefully there'll be guidance there, so borrowers will be able to take advantage of this for funding opportunities. And with that, I'm going to turn the program back over to Todd for polling question number 2.
Okay, folks, this is the next question. Pteronophobia is the fear of being exposed to strong perfume, speaking before a crowd of strangers, or being tickled with feathers. This is very important information. So if you can just right now vote which one of these you believe this fear is, and the poll is now open, so start. Okay, we've got a few people voting in. We're halfway there. Keep that voting coming in. Remember, if you're having a problem, hit the escape button. You'll be able to vote after that if you want CPE or if you just want to know what the answer is. All right, so here we go. It looks to me like most of you said being tickled with feathers, and that is correct. Who goes out and studies the fear of these phobias? I don't know, but you got that one right if you answered the question, the fear of being tickled with feathers. And now I'm going to turn this back over to my partner and friend, Josh. PPP, loan forgiveness, open questions. Give us some answers, Josh.
Happy to, Todd. I want to thank everyone first too for the overwhelming support for the picture of the belt. That has made my day. So thank you very much. So as Steve mentioned, there's a lot of things potentially changing. Sounds like all for the better. If we remember all the way back to the beginning of April, initially everyone could apply for the program. Then Shake Shack happened. Then the SBA scared everybody. Then they loosened the reins, and now it seems like they're making it more favorable for everyone else. We do expect the president to sign the bill extending it to 24 weeks. But for those of you who have spent the money in the 8-week period and are comfortable with, applying for forgiveness, we just want to kind of highlight some of the key points that are in the current forgiveness application, so that, like I said, if you do move forward in applying for forgiveness, you kind of have all of your ducks in a row. So With respect to payroll, there is the opportunity to have an alternate payroll covered period, which is an election that the borrower makes to begin the 8-week cover period on the date of the first pay period following the receipt of the proceeds. So if you were funded on April 1st, but your next payroll doesn't begin until April 8th, you're able to begin the 8-week period for payroll purposes only on April 8th. With respect to payroll costs, it's paid or incurred. So payroll costs incurred during the 8-week period, but paid on or before the next payroll date are forgiveness eligible. This kind of goes hand in hand with the alternate payroll covered period. They want to give the borrower the flexibility to not have to do special payrolls, or make changes to their current situation in order to capture all of the payroll for the 8-week period. As of now, and we still believe to hold true, the $100,000 cap applies to cash compensation, right? So the maximum per borrower per individual is $15,385 for the 8-week period per person that you can apply for forgiveness. And owner compensation, and we're going to touch on this in one of the open points in a minute as well, but compensation for owners, partners, etc., is limited to 2019 amounts, and again, capped at the $100,000 per person. Full-time equivalents, again, this may be a moot point in the future, but as of now, full-time equivalents are measured at a rate of 40 hours per week. The instructions to the application form provide a formula to compute the average FTEs based on average paid hours. There's also a simplified method. Gotten a lot of questions about what if I only work a 35-hour week or a 37.5-hour normal week. You do the math. I think, similar to, if you remember back, the loan application initially, people were looking at, what was the best period? Was it the 2019 payroll numbers, or was it the trailing 12-month payroll numbers for purposes of calculating? Here, I think you do the same thing. And, to determine what gives you the lowest FTE, at least the way the application is written now. With respect to non-payroll costs, so the covered period, so the alternate covered period is not available for non-payroll costs. It also is also paid or incurred. So if you have non-payroll costs incurred during the 8-week period, but paid on or before the next billing date, so the next invoice date, are forgiveness eligible. Rent or lease payments, again, these now include payments for both real property, which is buildings and facilities, and personal property, equipment, furniture, software, vehicles, etc., are eligible for forgiveness. You have a lot of people still concerned about meeting the 75-25 or maybe now the 60-40. The concern is over, if the concern is over the non-payroll costs, look at all your leases, look at all your notes, make sure you're capturing everything. And the same thing with respect to mortgage interest payments. So payments of interest on loans for both real and personal property are forgiveness eligible. And again, just want to reiterate, the way the law is written is that line of credit interest is an allowable use of the PPP funds. However, that money is not eligible, that you spend on line of credit interest, eligible for forgiveness. And again, with respect to the forgiveness formula as it reads now, the non-payroll cost forgiveness is limited to 25% of the total amount forgiven. Could go up, potentially will go up to 40%. So just want to revisit some of our open questions that we've been discussing every week. First one, will the 8-week period be extended? Certainly looks that way. Thank you for getting it right, potentially. 2, for enterprises that are closed and are not making payroll costs. So if I'm a restaurant, I haven't been able to open, and I'm scheduled now to open on June 15th. However, I received my loan in April. Am I allowed to begin my period June 15th, the date that I'm open and going to begin making payroll for the first time. So I think that's something that's still to be clarified, is even if I was closed, does it look to my next normal payroll date, or will it look to the date that I actually make my first payroll? How does the paid and incurred standard impact retirement benefit forgiveness? We know we can now include bonuses. They still haven't touched retirement benefits with respect to accounting for prior year profit sharing contributions. However, with the extension of time, we believe that folks shouldn't really have an issue spending the money. For our corporate shareholders who are also who are employees, allowed to include non-cash benefits in forgiveness requests where partners and other self-employed individuals are expressly forbidden. So if you're an owner, you're a shareholder in a C Corp or an S Corp, the way the rules read now is that you're entitled to your $15,385 of wages plus your non-cash benefits, so your health insurance, your retirement. However, if you are a partner in a partnership or a Schedule C, you are limited to the 15,385. So we're still waiting for more clarification there as to if they will make it uniform across the board or if we're stuck with the way that it is now. Next question, we still don't know the answer. Will the expenses be deductible for tax purposes? We still don't know. We do know that in the event the loan is forgiven, the proceeds are not taxable. However, those expenses which you use to put forward against the forgiveness, those are currently not deductible either. So there's still a wait and see approach there. We don't know how the states will account for the forgiven funds at this point. The next question looks like we do have an answer to. Will the 75-25 payroll non-payroll cost ratio be eliminated or revised? What's on the table is 60-40. However, we don't know going to question 8 if we'll be able to include additional expenses in those costs eligible for forgiveness. So as it stands right now, we know it includes rent, right, on your real and personal property. It includes mortgage interest on your real and personal property, and it includes utilities. And speaking of utilities, we're still not sure what the definition of a transportation utility is. We believe that it will expand to include fuel for our vehicles, which are covered under rent or mortgage interest. So our fingers are still crossed there as we wait for more information. What is the impact of forgiveness for individuals out on disability, paid sick leave, or FMLA? We're still waiting for more information there as well. However, given the extended deadline to December 31st, it may not become an issue. Will there be a separate application for seasonal employers? We don't know to this point. I do expect there to be some more information with respect to seasonal employers and those, self-employed sole proprietors. I think there's still some question out there. We know right now that the payroll non-payroll allocation, the math doesn't work. So hopefully there will be more guidance forthcoming there. And the last question, how many times will this application change prior to being submitted? Well, at this point, we know it's going to have to change to account for the extended weeks, the extended deadlines. So the question, I guess, is how many more times will it change? It's a great question, but we do know it will change. So I'm going to give it back to Todd, who's going to take us through another polling question.
Thank you, Josh. Okay, polling question number 3. Can snakes can help predict earthquakes? True or false? The poll is now open for you to vote. Snakes can help predict earthquakes. True or false? Okay, the voting is started. Give you some time to put in your answers. Remember, if you want CPE, you do need to answer at least 3 of the 4 polling questions. We don't care how you answer them. You just need to answer them to prove that you really are there. And if you can't put that question through, it won't let you. Just hit the escape button and push it through. So this is our 3rd of the 4 polling questions. And we are, yep, we're almost there. Okay, here's the answer. If you're wondering, why did the creator create snakes? It is true. Snakes can help predict earthquakes 75 miles away and up to 5 days before it happens. So if you are interested in whether or not an earthquake will hit you, maybe you need to get a snake. I'm not sure how they actually tell you that an earthquake is coming. I don't know how they communicate it, but apparently they do know how to predict earthquakes. Okay, this is my section. PPP loan forgiveness documentation. We felt it was important to go through this again. We do know that it seems that the rules may be loosening up, but we still believe, folks, even if the rules get loosened up, you are going to really need to focus on documentation. First, borrowers must maintain documentation for 6 years after the date the loan is forgiven or repaid in full. So it may be that this may be a long time, especially if they start extending the loan repayment to 5 years. This could be a very long time in which you folks need to keep documentation. The SBA and the Office of Inspector General must be allowed to access documents upon request. So you need to give that permission to them. And regarding payroll, documentation of eligible cash and non-cash compensation amounts, which is bank statements, third-party payroll service provider reports, and applicable payroll tax filings, and support for employer contributions to health insurance and retirement plans. Now let's talk about once again, the non-payroll documentation verifying the pre-February 15th, 2020 lease and or utility obligations, which might be amortization schedules, bank statements, canceled checks, receipts, lease agreements, and or utility invoices, and the average number of FTEs, February 15th, 2019 through June 30th, 2019, January 1st, 2020 through February 29th, 2020, or any consecutive 12-week period between May 1st, 2019 and September 15th, 2019 for seasonal employers. And yes, this may change, but you're still going to need the documentation. So set it aside now. While not required for submission, borrowers must maintain the following records: employee by employee documentation for the amounts included in payroll costs, both above and below the annual 100,000% limit, documentation regarding employee separation events, including job offers and refusals, firings for cause, voluntary resignations, and written requests by any employee for work schedule reductions, and documentation supporting the FTE reduction safe harbor. And of course, if you saw last time we showed you the PPP application, there is a section on borrower demographic information form. The completion or non-completion has no bearing on forgiveness. Okay, so we're going back through something we spoke about in the past because we think, again, it's important that you understand and remember your certification about whether or not you really should have received this loan is still going to be important. Questions you should be asked to determine if your business is an intended recipient should include, based on the facts and circumstances known at the time you applied for the loan, can you prove that you had a reasonable belief that your business was or would be negatively impacted. So here's some of the questions. Did you lose key customers or a significant number of customers or anticipate that you would? Did you have a valid basis to believe that customers would slow pay as opposed to fast pay, slow pay, or become non-payers? Painful, painful, painful. Did you lack access to financial resources to be able to withstand a decline in revenue? And can you prove the facts and circumstances for the first bullet point with written documentation? Remember Josh's favorite line, document, document, document. And from the date that you applied for the loan and the date that you received it, has the business improved or declined? So the question is, what if my business was not negatively impacted despite COVID-19 and I received a PPP loan? There are three considerations. Your certification, if your business improved financially despite COVID-19 and you received a PPP loan, serious consideration needs to be given as to whether the certification was falsely made. We believe that for the most part, you would not have made a false certification. The second consideration is forgiveness. And the third, repayment if the certification is believed by the government to have been falsely made. The government can require immediate repayment, we believe. So each borrower, we believe, should document the reasons to support your PPP eligibility. And folks, don't wait to do this. You should have this done by now, and you should, if you haven't, do it. Examples include, but are not limited to, do you have access to capital outside the PPP, line of credit, significant cash reserves, other capital resources? Second, is your business open? If yes, are you operating with a reduced staff? Third, did you have a decline in current sales and or a cancellation of future orders? Fourth, have your receivable collections decreased and or have your customers requested more favorable payment terms? We know that this is true for most of our clients. Next, any supply chain issues, diminished access to product or materials, inability to deliver product, reduced access to labor market. And are your customers or vendors applying for PPP funding? So folks, you should have documented the fact that you were eligible. We encourage all businesses who have applied or plan to apply, because still there's some folks out there, you know, if you haven't applied, you still have a chance up to June 30th for the PPP loan to document their rationale as to why the loan is necessary to support ongoing operations. You should prepare a 30, 60, and 90-day cash flow analysis, taking into consideration any loss from the operations, any potential employee layoffs or furloughs, debt repayments, projected expenses, and other cash disbursement commitments would be one example to demonstrate that the PPP loan is needed to be able to provide support for ongoing operations. And we do suggest that management and the board should formalize this guidance so that you have it in your record, because the certification is going to still be critical when you go for forgiveness. Okay, now we're on poll question number 4. This is the last of our 4 polls. Bananas are curved upwards because they grow towards the sun. Second, they grow in a bunch. Or third, those smart scientists genetically engineered them that way. So the poll is now open. Let's give you some time to keep the poll open so you all vote. So put your votes in. Obviously, if you voted for 3 of the 4, you don't have to vote for this one. But heck, why not find out? Why are bananas curved? What is the reason why? And we have, we're not quite there yet, so keep on putting your votes in. We're about at 50%. Let's keep it going a little bit longer. Man, I do like the answers to this. I think that some folks are very creative. Okay, keep your voting going. All right, I think just a few more seconds. And yes, here's the answers. 43% of you said they grow towards the sun. 52% they grow in a bunch, and only 5% that they were genetically engineered that way. I'm thankful that it was only 5%, but the right answer is bananas are curved because they grow toward the sun. So now you know the answer to that. You can impress people at your next virtual cocktail party. All right, I'm going to turn this over now to Josh to talk to us about some open discussion points. Josh, it's all yours, my friend. Talk away.
Thanks, Todd. You've really given the people a lot of great information today. I'm sure they're all very appreciative of the hard work you put into those questions. So, we're gonna take some time now to talk about some questions that people have posed, some things that are floating around in my head, the task force head, and kind of put it out there for everybody. So first question is, if the weeks are extended from 8 to 24, will the 15,385 max payroll be increased as well? I would think so. We'll certainly wait and see what happens there. If the 8-week, we were getting a lot of questions previously, was if my 8 weeks ends after June 30th, am I stuck? So prior to this morning, the answer was no, and even after this morning, the answer is no. The June 30th date was only a placeholder for bringing back head counts. So even if you still are going for forgiveness after the 8-week period, and that happens to be the beginning of July, it doesn't, you're fine. So, we're still getting some interesting questions from people who say, okay, this is all well and good. Let them extend the period from 8 weeks to 24 weeks, but I'm done. For a lot of people, I think, who were funded at the very onset of the program, their eight weeks is up, next week. So what do? And I think if you're comfortable with your calculation and you have the documentation to support it, then you go forward and you apply for forgiveness, because extending the period now doesn't help you, it doesn't hurt you. The only thing that would potentially help you would be more guidance. So if more information comes out regarding non payroll, if you took maybe an aggressive stance, it will enable you to back off of it. But certainly, if you do go ahead and apply for forgiveness, I think we are going into some uncharted waters. I don't know how the banks are going to react to receiving these applications, nor the SBA, given that they are continuing to put out additional guidance and changing the program as we speak. So I think if you are on the verge of being done and you're comfortable with where you're at, then it may be in your best interest to reach out to the bank, start having that discussion, let them know where your head's at in terms of applying for forgiveness, and see what they say. I would assume there would be some, direction initially coming down from the bank as to what's supposed to happen. Just a reminder for everybody too is, once the bank does receive the forgiveness application, they have 60 days to render an initial decision on forgiveness, and then they kick it up to the SBA, who would have an additional 90 days from that point. And again, too, as Steve mentioned in the very beginning, is that deferring the payroll tax, deferring the employer portion of the Social Security taxes will not be affected by this. So next question, suppose you are self-insured and you have to pay a stop loss insurance policy. So obviously, so that you can manage your claims, right? Otherwise, there's a chance that the company could go bankrupt. Does that payment qualify as health insurance that would be eligible for forgiveness? That was a really great question. There is not much in terms of information with respect to self-insured plans. I guess, from our standpoint, you include it and you let the bank push back, ask for more information. But certainly going back to the points we made before, you include all of that in your documentation as to why the money was spent and why you are including the money that way. Next question for my not-for-profit people out there. There's been a lot of discussion, right? We know a lot of not-for-profits did apply for the PPP funding. They're still unsure with how this funding interacts with its other government funding, how the government agencies will treat the payroll being applied to this loan or applied to their contracts. So I think there's a lot of conversations happening right now with organizations and their contract administrators. I think, from our standpoint, at least based on internal discussions we've had, you go for forgiveness, because if you don't and it becomes a loan, it gets repaid with interest as opposed to, money just going back to the funding sources, no harm, no foul. But there may be the opportunity to go back, speak to the funding sources, see where modifications might be available in the contract to shift away from payroll. Maybe there's some non-allowable costs, or maybe there's the opportunity to convert some of the payroll piece into PPE expenditures. As we all know, as we're getting back to our office and business locations, that there's going to be a lot of changes, and there's going to be a lot of costs to set up our offices the correct way, having the appropriate, sanitizer, masks, things of that nature. So that all comes with a cost, much like everything else. So will there be an opportunity to redirect some of those funds? If you don't ask, then you'll never know. So don't live in the dark. You have to ask the questions and kind of make a business decision from there. Steve mentioned before, there's still over $130 billion remaining in the program. So if you haven't applied, apply. And if you applied, receive the money, and return the money before all these FAQs came out in early May, and some of the reins loosened on the program, see if there's opportunity to go back and get that money again, because maybe where you thought you didn't fit initially, you fit now. So apply, get it in. We do believe that there will be a cutoff at some point, most likely June 30th. So that still gives everybody about 26 days to get those applications in. I know some of the bigger banks, the application process is open again. Some of the websites were down for a couple weeks, but it looks like, at least with a couple clients who I've spoken to who are still interested in applying, those portals are still open. Been getting a lot of questions about the Main Street lending program, and I think it lends itself to a bigger conversation, and conversations that we'll be having with bankers, and I think you should be having with bankers as well. And that is if you evaluate your current position and you determine that there is a need for more funding, are the banks going to lend? These are certainly very uncertain times. There's risk, as we know, with any and all debt. So are banks going to be less, focused on lending and more focused on overseeing these programs, or will they get back to business as usual? We don't know. But if you think there's a need, I think you need to start having a conversation now. And I think you need to look at the Main Street program as an option. As we know, it's based on certain EBITDA calculations. So if you meet it, then maybe I wouldn't rule it out. I think initially, we saw it internally as maybe not the most attractive program out there, but it may be the only program out there. So if it's something you need, it's certainly worthwhile looking into. At this point, the banks are not accepting applications for it, nor do we know which banks are going to be participating in that program. However, we do expect more information to come out, hopefully in the next week or so. And finally, just something else to share. There was an interesting article that one of our partners shared with us yesterday that was in the American Banker that said that there were two large banks lobbying, two big bank lobbying organizations who were asking Congress on Tuesday to automatically forgive small business loans of less than $150,000 that are made under the Paycheck Protection Program. So it'll be very interesting to see if that actually gets legs. It would save a tremendous amount of time for businesses, to move away from the calculations and the monitoring and just move forward with business as usual. So before we conclude, I'm just going to kick it back to Steve, who's just going to speak real quickly on some other pending legislation that may actually come out there. So Steve, I'm going to kick it back to you to touch on that and then wrap up the presentation.
Thank you, Josh. Thank you, Todd. I just wanted to take this moment to discuss more of a grander or overall landscape as we're looking forward. On our past few webinars, we have touched upon the HEROES Act, which was the 1,800 plus page act passed by the House that discussed a number of different items beyond just PPP. There were essential workers, funds, additional stimulus payments, a maxing out or an increase of the employer retention credit, housing assistance, the loosening or removal of the state and local $10,000 cap for individual taxpayers who are deducting state taxes for federal purposes. So there was a number of different legislation items that were out there, but we were pleased to see while the HEROES Act, as we mentioned before, has stalled in Congress due to different motivations amongst the different political parties, the government did act swiftly, at least the Congress, and expecting the president to sign, but the government has acted swiftly to get PPP first and foremost. But there are additional larger items that are still out there. We saw this week the House pass a broader transportation bill. We'll see if that passes. They're talking about a larger bill, again, to add more coronavirus relief, but there's different motivations and different political pressures that are out there. So there is somewhat of a deadline because there's a July 4th congressional recess coming. So we're going to be paying attention to the landscape. And while PPP and loans and safety are clearly first and foremost on our minds and a lot of the minds of people listening to this webcast, there are larger bills and larger coronavirus relief aid packages that are out there. So that's just something for people to monitor. And as Josh mentioned too, the Main Street loan programs and other Federal Reserve non-SBA type programs that will be out there or are out there. So we'll see. And with the overall goal of maintaining payroll, keeping people off unemployment to the extent possible as we move off of these complete closures and phase back into openings. And it's going to be different depending upon where we're located throughout the country. So just want to keep keep that in mind, an overall broader picture, and just make sure that that's on the minds of people listening to this webinar as well. And with that, I'm going to turn it back over to Todd for some additional housekeeping items. So Todd, take it away.
Thank you, Steve, and thanks for the updates and where we are, folks. If this does get extended for 24 weeks, maybe you'll hear us for the entire duration of 2020. I don't know, but we are definitely here for you. So a few things housekeeping-wise before we leave. If you are someone who is looking for CPE, you are a CPA, and you need those credits in order to maintain your license, remember, you have to stay for the duration of the program, which obviously if you haven't, then you're not listening to my voice, so it doesn't matter. Second, you had to have at least answered 3 of the 4 polling questions, and yes, we know who you are. And last, you could see in the handouts, there's a participant evaluation form that you need to complete and send to the email address that's very clearly marked there. So with that being said, we have another update coming next Thursday, June 11th at 10 o'clock. Obviously, if anything major comes out before that, you'll be hearing from us through our e-blast. And also, there's additional information at our COVID-19 Resource Center. If you have a question, please email us at covid19@sacsllp.com. And with that being said, since we did actually go 50 minutes, folks, those of you who need CPE, you get 1 whole credit. So hopefully that's helpful. We had quite a few folks say, how come you're not giving CPE for this? So we considered that, and yes, we're offering that. So pass the word around. We are giving CPE. So thank you for attending this webinar. We are wishing you to be safe and have a great and wonderful day. Take care, folks.